Jason Loucks here, founder of secretlender.com, creator of the foreclosure investing system at foreclosureinvestingsystem.com. And I got big news. Real estate is soaring. Let me see if I can back up a little bit just so you can see my hands. But here's the deal. Real estate numbers are in. The July numbers are in. The September numbers, the August numbers will be out in a couple of weeks. And here's the big takeaway. Real estate is booming like crazy. I'm going to hit you with some stats in a minute, but I want you to get the big idea here. Real estate is hot. It's rising. Sales are off the charts. Even in this COVID economy, or whatever you want to call it, this post-COVID economy, whatever you want to call it, right through the crisis, real estate was booming. April was a big month. Now, obviously, March, everybody was scared. Everybody was pulling money out, moving money around. Was not a great month. Was not terrible, but was not a great month just because of uncertainty. April blew the doors off of March. May was just out of sight. Sales in May were up like double digits percentage, 20% I want to say, but don't quote me on that because I didn't double check that one before this video. June was up 21% over May. July, and this is the newest stats, July existing home sales, the normal sales, were 24.7%, got my notes right here, 24.7% higher than June. In July, 24.7% more homes sold in July than June. That is phenomenal. June was up 21% over May. That's the highest month-over-month increase in the history of real estate agenting. So like in more than 100 years, it's never gone. Sales have never increased that much. Not values-wise, volume-wise. 20% more houses sold in June than May. And by the way, in June, just as many houses, in fact, a little bit more houses sold in June of 2020 during the COVID, rollout, halfway lockdown, whatever you want to call what's happened in June. And by the way, if they sold in June, they went under contract in May or even April, right? So contracts were being written like crazy in April. Contracts were being written like crazy in May, and they closed 21% more houses in June than in May, okay? That's the important stat for June. Now here's what's more important. July beat that already record number by 24.7%. Didn't just beat it, blew the doors off it. 24.7%. That means almost 25% more houses sold in July than June. That is literally a record. July set the record for most home sales. They haven't seen increases like this ever in terms of volume. Now here's what's even more important. July's home sale prices. The prices of houses in July 2020, that 24.7% more sales was actually higher than July of 2019. In other words, when the economy was doing great, we still weren't selling this many houses, okay? So houses are selling now better than they were pre-COVID. Let me move this stuff out of the way so I can back up a little bit. I got to use my hands here. So more houses are selling right now in the United States, post-COVID, everybody begging for bailouts and everything else. More single-family homes, regular people live in them, not investment properties, not commercial deals. A lot of those lenders are out of the game. But for us investors, us for-profit investors, more houses are selling, existing home sales, single-family homes, and I'll get into all that, but here's the big takeaway. More houses sold in July of 2020 than July of 2019, and July of 2019 was pretty freaking good. So even though other industries are really suffering from COVID, other industries are not doing well because of COVID, our industry is doing great. So if you're working from home anyway, I highly recommend you work from home in a home-based real estate business. If you've heard me talk about it before, it's what I call a Lone Ranger business. It's the type of business that, we're in it to win it. We're trying to make money. We're not trying to get equity and cash flow and all that other stuff. We get that. We do get that, but that's not what we're after. What we're after is upfront generated profits. Now is the best time I've ever seen, literally ever. And I'll prove that to you in just a second. But let me finish the stats, okay? Because I'm just getting too excited here. So here's the deal. 24% more houses sold in July of 2020 than June of 2020, even though June was already a record month. Now let's compare that to last year. no, sorry, 8.7% more houses sold in July of this year. 2020, more houses sold, 8.7% more houses sold than 2019. 2019, by the way, was freaking phenomenal. It was like the most home sales I'd ever seen. If you recall, they dropped interest rates 3 times. People were paying sub 4%, 3.94% is the average interest rate in 2019. People were snapping up houses like they were going out of style. Well, that interest rate went down again. I'm going to share that stat in just a minute, but it's down to 3%. It doesn't sound like a big difference to go from 4% to 3%, but think about it. It's a 5% move or a 33% move, or however you want to factor. 1% doesn't sound like that big of a difference, but on top of only 3%, it's a big difference. What does it mean? It means that people could afford a lot more house for the same monthly payment. And that's what we're seeing. We're seeing first-time home buyers buying more and more houses at the highest prices they've ever paid, higher than they've ever paid for houses before. We're seeing, a majority of home sales going. 96% of markets are up, and I'm going to cover all that in just a minute. But here's the big takeaway. July 2020 beat July 2019. We aren't in a recovering market. The real estate market is not recovering from COVID. It's already recovered, and it is booming. It is doing better than it was last year, better than it was pre-COVID, better than it's ever done before. The prices are record highs. The sales volumes are record highs. We haven't seen numbers like this ever, okay? And we haven't seen increases like this, and this is where the big takeaway is. This is what I want you to understand. We haven't seen sales prices increase like this around the country, and we haven't seen sales volumes increase like this around the country since 2006. Now you might say, well, that doesn't sound like such a long time ago. That's only, 14 years ago, something like that. Okay. I mean, it's not a short period of time, but it's not forever either, is it? But here's what the big takeaway is. 2006 was the biggest boom time in history for another 2 years. For 2 more years. Once you hit that big boom, it can't go on forever. Why? Well, because sell-through and inventory, and if a person bought a house 2 years ago, like they're doing right now, in 2 years, they'll already have a house. They won't be in the market anymore. The market will sell through. Existing home inventory is already disappearing. In fact, according to the National Association of Real Estate Agents, and, I don't necessarily follow everything they say with, take it with a grain of salt, but here's what they say, and this is an opinion, all right? This is their opinion of why there aren't even more home sales. In fact, the only reason it stopped at 24.7% and didn't go up even more, the only reason why prices went up 8.5% and didn't go up even more is because there's nothing left to sell. They're out of inventory. They're literally screaming for more deals. Houses are on the market for, a couple of weeks in a lot of parts of the country. And even in parts of the country that are, notoriously slow, that time frame of sales has been compressed. People want to buy right now. And I'm going to tell you in just a minute exactly what they want to buy, so you know exactly what to go get to sell to them. In other words, if you're investing, if you're an investor and you're a for-profit investor, you need to know exactly what we call sweetheart deals. Here, can I do this? Right? Is that cool or is that goofy? We call them sweetheart deals, okay? They're the deals that you want to focus on. They're the ones that make you the most money for the least amount of resources, time and effort. And I'll break that down for you in just a minute, okay? But first, you need to seriously understand that we are in the middle of a boom. I might be the only one telling you that. I don't know. If you're deep in the market, if you're already in the industry, you probably get that. If you've been buying and selling houses for some period of time, you probably get that already. You're probably feeling it in every single day when you go into your office and start checking stats and looking at your properties in your portfolio, and you go in, what's the response rates to my thing? Here's another key takeaway, okay? We're in a boom time. More houses are selling than ever before, and they're selling at higher prices than ever before, okay? That is very key. Now, some people are afraid of that because of the competition. They say, it's really tough to find a deal, blah, blah, blah. Let me tell you the truth. Right now, concurrently with this volume, with these prices going up, at the exact same time, we have a historical record of people who are behind on payments on their mortgages. There are more people that need our help that can't make those payments. More people that are behind on their mortgages than ever before. And that's despite the foreclosure moratorium, despite the government bailouts, despite the government printing, their arguing now in the House and Senate. Do they want to bail out landlords for $70 billion or do they want to bail out landlords for $175 billion? Which one's better for the economy? Despite all that, and let me tell you why. It's because there's a lot of people who are what I would call maybe reluctant, or, they don't self-identify, or they don't think of themselves as landlords, okay? They own second homes that sometimes they rent out on Airbnb. They own properties that they inherited and their brother-in-law lives in it. They own properties that were rentals and then went vacant during COVID because the COVID people wanted to be with family. If you're going to be stuck somewhere, you don't want to be stuck alone. You want to be stuck with your family. And so all of a sudden, these reluctant landlords are now stewards of a vacant house that they've been making payments on for 5 or 6 months. Well, that's a real financial hardship for a lot of people on a property which, by the way, Airbnb ain't coming back anytime soon. I'm not saying they're dead. I'm not saying they're gone. I don't know. I never really understood their business model or why anybody would want to do that anyway. But the reason is because they're not really in the business. So they don't want to be year-round landlords. What does that mean? It means they're dabblers. They're not really professional investors. Okay? If they're doing Airbnb, if they're buying properties and renting them out, in the summer while they're somewhere else, or in the winter while they're somewhere else, or, they want the property for themselves, but they don't want to have to pay all the money, so they rent it out, some weekends or some weeks or some months. That's fine. I'm not saying that's bad. It's just not at the professional level. They're not professional full-time investors, okay? Those are the people that need our help really bad. Because, remember foreclosure moratorium, all right? The foreclosure moratorium, the federal government saying we're not going to let government-backed loans foreclose, only applies to single-family homes, not townhomes, not condos, not any of those other things, okay? Single-family homes, owner-occupied, okay? Owner-occupied. So if it's a rental, if it's an Airbnb, if it's a second home, you are not exempt from foreclosure, okay? If you didn't know that, you better go double-check your paperwork. Call your attorney, see what you can do, okay? Number 3, it does not apply to vacant houses. Any vacant houses are considered fair game for the government to foreclose on those loans. In most of your municipalities, most of your cities, counties, and states are saying, we won't foreclose on you if you are a single-family home owner who lives in the house. If you're a duplex owner or a triplex owner or a fourplex owner, whether you live in it or not, you're fair game. So who's exempt? Single-family homeowners, owner-occupant, they live in it, okay? And COVID is what caused the problem. Who's not exempt? Anybody who fell behind on payments in February or before that. Anybody in anything that's not a single-family home. Anyone who owns a vacant house of any kind. If it's vacant, it does not have exemption for the foreclosure moratorium, okay? Now, so what does that mean? It means we have record numbers. Hundreds of thousands of people behind on their payments because it's been tough financially for a lot of people, especially if they were furloughed or unemployed, or if they were a waitress or somebody who gets tips and people haven't been able to tip them and all of that stuff, okay? And I'm not saying take advantage of anybody. I'm saying they need our help. They need our help. They're not going to be able to float those properties because they're not professional landlords, okay? They're not going to get bailed out by the federal government because they aren't a business. They don't qualify for small business benefits, okay? And by the way, getting bailed out by the government is like the worst way to run your business, all right? So they need our help. These are people who have legitimate properties. They're good properties, nice properties in a lot of cases. Some of them are beat up. Some of them need some work. That's where we come in a lot of times. Sometimes we don't need to fix them. Make sense? And the reason they need our help is because that industry just went poof. Will vacation rentals be back someday? I mean, I don't have anything against them. I hope so. If somebody wants to make a little side money renting out a property, I think they should have the legal right to do it. But I don't see that happening anytime soon. I don't see people traveling around like crazy anytime in the next 6 months or a year. Does that make sense? And so those landlords are not going to be able to sustain making those monthly payments on empty houses. They need our help. At the same time that these hundreds of thousands of people, record numbers of people are behind on payments right now. At the exact same time that record numbers of people are behind on payments, we have the biggest boom in real estate value history where other people want to move into those houses and buy them. Okay? That's where we as investors come in. We connect motivated sellers with motivated buyers. We create the deal. We make our money in the middle, okay? Now, let me tell you what properties you want to focus on, okay? Let's see here. Here's the trend. This is the deals you want to focus on. I know there's a lot of people out there in the real estate land, guru land, seminar land, whatever, who will tell you stuff like mail 10,000 postcards to every kind of motivated seller you can think of in your market area. And if even 0.5% respond, that's 50 motivated sellers. And out of that, you'll do whatever number of deals and you'll be rich. Okay? It's bullshit. It doesn't work. What it does do is it guarantees you're working only on the least profitable deals in your entire market area, because those are the ones that respond the most because nobody else wants to buy them. Those are the ones that give you that, 40 of those 50 are going to be ones you don't want, that you would never want even if they did respond, okay? And the profile of the burned out landlords that we buy houses from is like this. Well, I've got a 2-bedroom condo on the west side of town, and I've got a duplex over on the east side of town, and 20 miles away I've got a 2-bedroom or a 1-bedroom single family home, and they've got 4 or 5 properties, and they're all garbage that no one wants to buy. And why do they have that? Because they sent 10,000 postcards to see what would stick. And what sticks is all the properties that those people couldn't sell any other way. That is not what we do. That is not what we want. What you want to do is focus on those sweetheart deals. I know what the sweetheart deals are for my area. I don't know what they are for your area, but let me tell you what the world is telling us in general it wants right now, okay? Here's the trend. Number 1, single family homes. That's what's selling right now. Condos are not rising as much. Condo sales are not up that much. People want single family homes, okay? They specifically want single family homes in the suburbs. That is what they're buying. They are not buying in the cities. They are not buying single family homes in the cities. I'm not telling you no one's buying them. I'm saying those numbers are not going up. We're not seeing that huge demand. We're not seeing inventory run out in the city. We're seeing inventory run out in the suburbs. Everybody got me on that? Okay? If you want to go where the heat is, if you want to go where properties are going up 7, 8, 9, 10, 11, 12% a year, you're going to want to be in the suburbs. You're going to want to be working on single family homes. And let me be really specific. Right now, properties with more square footage, bigger houses, specifically houses that have enough square footage to have a home office or equivalent, are absolutely booming. Some humongous percentage of the people who are buying a house right now are buying a house right now because they discovered their working conditions, if they're going to work from home remotely, suck where they live now. And they need a house big enough, or with an extra bedroom or a den or a nook or a cranny or some place they can put an office. Now, smart rehabber, what are you going to do about it? When you fix that house, are you going to put it back the way it was? Or are you going to put a little corner office over there? Are you going to, right under that window, here's the perfect little nook for a home office. Oh, look, you can slide the slider over. It's not a door. It's not a den. It's not a bedroom. It's over there next to the fireplace, under the window, a little 6-foot square where they can have a home office. Are you going to do that and make thousands and thousands of extra dollars and watch your houses fly? Or are you going to go take that 1,000 square foot, 2-2, 3-2, whatever, and just jam everything full of bedrooms and bathrooms like your competition? Okay? And then turn around and try to sell it, and it'll sell. I'm not saying it won't. I'm saying you won't be tapping into that huge surge. Okay? It won't be selling in 22 days. It won't be selling at 10% more than it did last year. Okay? Because that's not what's selling. What is selling is single family homes in the suburbs with room to add a home office. Okay? I can't tell you any more specifically how that is. Here's what's awesome about that. What if you just went to your favorite, lead targeting list, and I can give you a bunch of them if you want. Just call the office, okay? I'll tell you the one that we use. And I put in, I want single family homes. I want them in these zip codes, and I want it to have at least 1,300, 1,400, 1,500, whatever is a little, is not small for your area. Does that make sense? You don't want it to be small. And I want it to have, whatever, a certain amount of equity. And I want that seller to have some kind of motivation. I want it to be a vacant house. I want them to have, outstanding liens or judgments. I want them to be behind on payments. I want them to have unpaid taxes. I want them to have some reason why they're likely to be motivated. Everybody with me? Not because I'm trying to take advantage of anybody. That's who needs my help, okay? The people who have plenty of savings and are living off their savings, hoping this all blows over, awesome for them. I'm so glad for them that they're keeping our economy afloat. They're handling it. They got it done. All of that is beautiful. They just don't need my help, okay? That's not, I solve problems. If you don't have a problem, great. We could still be friends. I just am not going to be able to do my business with you, okay? Because in my business, I take over problems, I fix them, and I get paid to do it, all right? So if you don't have a problem, awesome, high five. Next, right? I'm not mad. There's nothing for me to do for you, okay? All right. Now here's the other thing. Here's the takeaway. Here's the pricing. Listen to me because let me tell you how my brain works, and let me tell you what I see happening, okay? The majority of people do not buy houses based on the price of the house. We all have sticker shock when we look at houses. When I moved into my house, I was like, it costs how much? That's insane. Who would ever pay that? And I paid for it, okay? So that's how buying a house goes. They're always more expensive than you thought they were going to be for the house you want because they're always going up or, sometimes they go back down. But in life, in general, over time they go up. It's inflation. The dollar buys less and less. More house costs more money. You want a bigger house? It's shockingly expensive when you go to buy it, okay? So most people are not looking at necessarily the price of the house. They're going to see how much they can borrow. They go down to a mortgage broker or their bank or whatever. They go online to a little calculator and figure out, hey, if I can borrow, a certain amount of money, right, at this current interest rate that loans are going at, then I can buy this much house and I need this much down payment, right? And they do the math in their head, okay? But their math is based on how much can they afford every month. How much is their monthly payment going to be, okay? So in 2019, this is Fannie Mae. Fannie Mae did a survey of all home loans, okay? Purchase money loans, I should say, just to be really clear. People buying home loans. So for all new home loans written, Fannie Mae did a survey, and that survey showed that in 2019, the average across the entire country for the entire year of interest rates on home loans was 3.94%. Essentially 4%, okay? Just a hair under 4%, okay? Now think about that. That's phenomenally low. That's the lowest it had ever been up to last year. That was literally the lowest ever in the entire mortgage industry of all time. Until the Fed dropped rates again in 2020. In response to COVID, they dropped interest rates as much as they possibly could. If you remember back in March and maybe even in the early April, I don't remember exactly, bonds, you would have to pay somebody to buy a bond. Bonds were yielding negative interest rates. Like, I want you to take this money for 30 years and pay me back less money 30 years from now. It was insane. I don't know who would ever do that. Probably nobody did. But that's what the rate was. That's what the rate was going for. Okay, because they lowered interest rates again. Bonds were already yielding, 1.5%, 2%. If you drop rates a point, where are they going to go? Well, the answer is they went negative, right? Nobody had ever seen that before. It was literally considered impossible until it happened, okay? Here's the big takeaway. If the interest rate drops from roughly 4% to now, it's 3.02% average across the board, across the country for all purchase money home loans. If it goes from 4% to 3%, that sounds like a 1% move. It's not. It's a 25% move in how much house they can buy based on the interest. Now, I know there's taxes and insurance and all those other things, and those are still fixed costs, okay? But that 25% of that would have been interest they had to pay to the bank. You don't get anything for that. You don't get your taxes paid. You don't get your insurance paid for that. You don't ever get your interest money back from the bank. It's a pure cost. Does that make sense? So that pure cost of interest went down for home buyers by 25%. Arguably 33%, since now it's at 3%. Before it was at 4%. That's a big difference. What that means is people who were looking to buy a $300,000 house before can now buy a $400,000 house, roughly. Obviously, I'm making math easy, okay? People who wanted to buy $1 million house before can buy $1,250,000 house, or whatever that math works out to. I think I just blew that one, okay? But you get my point. They can buy more house now. And since most people aren't looking at what is the dollar value of the house, because most people aren't writing a check to buy the house, they're borrowing money from a bank, they're deciding what kind of house they want based on what can they afford, based on how much do I pay every month. That's what's pushing values up. Low interest rates are pushing values through the they going to be low forever? I don't know. Nobody knows. Nobody ever thought they'd go this low. Nobody saw COVID coming, tanking the interest on every investment, the stock market crashing and people pulling their money out. And now they're yield hunting and they're looking for anything that pays anything and is safe, which is us, by the way. So you need to let them know that. But if you know what they're buying and you know how much they're willing to pay for it over the next couple of years, doesn't it make sense that values are going to go up something like 25%? The big takeaway here is it's not going to take a couple of years. They're already in the market now. The people who are wanting to buy are buying now. They're going to sell through. It's already been 8.5%. It's already gone up 8.5% of that 25%. That's the most important piece of the puzzle here, okay? So you need to get in now while it's happening. If you join this market in 3 years, it will not be like this, I'm telling you. So make sure if you want to be a cash flow profit investor, if you're running a real estate business, you're not just buying properties and waiting forever and hopefully someday it'll cash flow, or, the cash flow will, be a nice adjunct to your IRA when you retire in 30 years. That's not what we do, okay? We make a living buying and selling houses, and the side effect of that is we don't sell them all. We keep some, right? That's what we do. It's different than what they say, okay? They're not in the real estate business. They're in the whatever business they're in for 30 years, and as a side investment, they got this Airbnb thing, right? Like we talked about. Well, look, we can use the house on the lake anytime we want, but until then, it's paying for itself. Okay, they're gone. They're done. They're out of business because that whole thing went bust. Just like everybody knew it would go bust, we just didn't know how it would go bust, okay? You can't have a business that thrives with people who aren't in business. It doesn't make sense, okay? So here's the big takeaway. If you want to, and there's a third thing to this. I'm just going to say it because I don't have time to go over it right now. Because of stock market turmoil, because of those negative yields in the bond market, because of all the garbage going on with government bailouts, and people are starting to get the feeling that the stock market is some BS shenanigans and they just don't want their money at risk in it anymore, because of all those factors and all those reasons, there's the stat. If you need a stat, I'm not trying to fool anybody. I'm just telling you, like, I follow stats, but I can tell you if you just put your ear to the ground, you're going to hear this. You just might not know how big it is, okay? There is 381% more investment capital that is what's called uninvested. It's sitting in money market accounts, savings accounts, checking accounts, unallocated cash in IRAs, easy to get to funds, not sitting in a stock, not in a mutual fund, not in anything where it takes the person months to move it around, okay? Those funds are looking for a safe, secure investment outside the stock market. That's us. That's your deals. That's where you go get one of those Airbnb vacant houses that's on the people are behind on payments and the writing's on the wall. They're not going to be able to afford it long enough to survive till people are traveling and renting houses and everything again. Some municipalities won't even let them do it anymore, right? And so they're finding out, hey, this business model isn't working, and they don't have the cash to keep the properties afloat. Some of them inherited properties and they weren't able to take care of it. A lot of people who are on the chopping block, I hate to say that because it sounds really rude. That's not what I'm talking about. But the foreclosure moratorium doesn't apply to anybody who was already behind November, December, January, February of 2019, 2020, right? If they were if paperwork had already been filed, if they were behind on payments before March of this year, they are not, the moratorium does not apply to them because COVID didn't cause them to fall behind. They were already behind. So there's a long list of people who are on the chopping block who do need our help, and that's where we come in, okay? So if you want to be able to borrow OPM, other people's money, from secret lenders, that's those investors who were invested in something else, and that something else sucks now. And they really need people like us who will take an asset like a house, use that asset as collateral to borrow the money, to solve the problem, to sell to the end buyer, to make us a profit, to pay our investors back, to make the world a better place, to make a beautiful house and a buyer who wants the house real bad. We make the entire economy go round, okay? If you want to get in on that, I've got a free video for you. Absolutely, just go watch it. It's a walkthrough of how to do it. Obviously, I can't cover every topic in every video here on Facebook, but if you do want to know how to do that, just go to secretlenders.com. secretlenders.com. Just click on show me the free video. It's right there. It's a walkthrough of how you use OPM and how we sell these houses directly to owner occupants, sometimes without fixing them first, the whole process, okay, and how to handle these deals, what kind of deals you're looking for and everything. All right, guys. You can tell I'm excited about this stuff. This is what I do every day. I'm sorry I haven't been making you more videos, but I've been really busy. Again, I'm Jason Loucks. I'm the founder of the Trash in the Cash system. You can find out all about online. Check out secretlenders.com if you want to know how we do what we do. And thanks very much, guys. And if you have any questions, just go ahead and put them down in the comments. I literally can't follow the comments while I'm talking here. I just lose my train of thought. It goes long enough when I keep my train of thought, okay? But I'm happy to answer your questions. Just go ahead and put them down in the comments. I'll try to put a link to that secretlenders.com so you can watch that free video. And again, thanks very much, guys.